In this video, we will talk about Santo mining, trading under the ticker symbol SANP. We will cover what the company does, what recently happened, and my opinion on if you should buy the shares. Santo Mining is a fintech company with a substantial part of its operations in Asia and listed on the US Stock Exchange. It uses blockchain technology to provide services that can be more efficient, secure, and affordable than the current options. On their website, there are several projects that are ongoing, including dividends, DNA tags, and crypto art trading. The dividend services gives client the ability to complete transactions at a lower cost and to remove the need of financial institutions as the middleman. Their DNA tags is an anti-counterfeit service to make sure that products can be identified down to the unit, which can effectively prevent fake or copycat items. The blockchain will act as a confirmation tool so that consumers will receive the exact item that they paid for. The product provenance will exist on a ledger that is available to all and impossible to modify. The crypto art trading consists of paintings or original pets that are limited in quantity and certified by the blockchains. It is a form of art trading that has grown in popularity in recent years due to the inherently rarity and uniqueness behind each crypto piece of art. If we look at the financial statements of Santo, the company has fairly low revenue in comparison to its expenses, and it has a significant amount of debt. The other noteworthy factor is that its cost of goods sold is higher than the revenue. This means that a company has not yet identified a good cost control on its operations or does not know how to price its services yet. After all, fintech is a relatively new sector and may not have the exposure on the public that traditional financial institutions have, such as banks, clearinghouses, and auction houses. Many economies still heavily rely on not only traditional financial system, but also on cash. It may take some time to convince consumers at large that lines of code can also represent and safekeep value, just like paper bills they have in their pocket. With that being said, the technology is being explored by financial institutions as we speak. There are cryptocurrencies developed by consortiums of financial institutions and even the Bank of England called RS-Coin. The field is still in its infancy and may take another decade to fully blossom. Recently, Santo Mining announced that they would change the contracts from Ethereum-based to Goguen, which can improve scalability and reduce the fees involved. This has sent the stock price on a 200% increase. The question now is whether the stock should be bought. Before we move on to the recommendations, if you like my content, please like, comment, subscribe, and check out my channel for more analysis videos. I believe that Santo Mining would be a good trading option if your risk tolerance is very high, or if you have experience in managing your risk. The stock is not only a penny stock, but has traded close to $0 value in recent history. It is a company with a tiny market cap, and the latest financial statement that I found dates back to 2018. The fact that a significant portion of its operation, staff, and facilities are in Vietnam also means that regulators' oversight will be limited. Keep in mind that the stock itself is listed in the US. However, it is fair to assume that the stock recently enjoyed an increase in demand, mostly because they switched from Ethereum to Goguen. For a penny stock, this is enough to push its stock price to a much higher place than where it was. After all, if its price increased by 1 penny, that would be a 100% increase. The downside in trading penny stocks is that the percentages will give traders the feeling that the stock can take more volume than it actually can, which may result in overtrading and positions stocked due to the lack of liquidity. Many people perceive penny stocks as pure risk and no reward, but that is not the case. They carry a high level of risk because the potential reward is often much higher than for blue chip stocks. Same goes for the potential losses. If you are capable of effectively controlling your risk and can tolerate the high levels of volatility, then Santo mining may be worth a look. The short-term catalysts are the new company announcements regarding the technologies that they want to adopt, not necessarily the financial statements. The name of the game here is called hype trading. You are essentially speculating on other traders' expectations to make a profit. Due to the volatile nature of the company, the maximum exposure should be kept below 1% of your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.